Good morning, everybody. Welcome to the Morning Muffin, your morning carbo load of real estate. I'm the host, Jennifer Cotis, and with me today, as always, is
I'm Lisa Wickman, and we have a special guest today, Michele Schull from Alaris Mortgage. Yep, she's down there. Michele, thank you for joining us. We really appreciate it. So, Michele is a lender. Can you tell us just a little bit about yourself?
Sure. Yeah, I've been originating home loans for, oh my gosh, 20 years. Crazy.
And we've been working together for about 4 years.
Yeah.
Yeah. So,
yeah. At an open house.
At an open house we met.
In our neighborhood. That
was crazy. Neighbors. We're friends.
Yeah, we're friends. But I was being a nosy neighbor. Remember? You had a listing.
I do.
I went in and you were like, I live on this block. And I'm like, so do I. Yeah, that was great. Right. So, yeah. And we have the same birthday.
And we do have the same birthday, Jen. Can you believe that?
You guys, this is awesome. You guys, it was meant to be.
It was meant to be. So we've celebrated our birthdays. But anyway, today we are talking about mortgages, applying for a mortgage, how changes have come about during COVID. So I'm just going to ask you a few questions, if that's all right. And we'll just let the conversation go where it goes. Okay?
Yeah, sure. Okay.
So we want, in talking about applying for a mortgage, people can do that online. Yep. And they need certain documents. So can you tell us what documents are needed in order to apply for a mortgage?
Yes. Well, at minimum, what we require, or what I always want to review, the most 2 recent years of your federal tax returns. So if you were applying today, that'd be 2018 and 2019. 2 most recent years of your W-2s. So again, 2018, 2019, if you were applying today. 2 most recent pay stubs. A valid, non-expired ID, which has been a little tricky with COVID. So that's why I mentioned that. Like, you got to kind of that. And then 2 most recent bank statements. And I need all pages of the bank statements. So a lot of times people just like to send a screenshot of, like, here's my average balance page, but we actually need all of the pages, even if they're blank.
Yeah. Okay.
So if it says 4 of 5 on the last document, you're like, where's 5? Correct. And they're like, oh, it was blank. I threw it away. And you're like, oh.
Right. And I'm like, oh, well, I still need it. Not my rule, but I have to follow the rule. So we need all the pages. Yeah.
Okay. So I didn't realize that taxes were absolutely necessary.
You know, here's what I'll say about the taxes. They are not always necessary. They're not absolutely necessary for every file. However, it does happen when we're ordering tax transcripts, because we have to verify that the borrowers actually reported the income that they made to the IRS that is also in our file. They have to match. Sometimes it doesn't. So, and that reason could be maybe there was a job change in 2018 and they had a W-2 from a previous employer for $600, right? And now but they've been at their other employer for 11 and a half months, and that was the majority of their income. So a lot of people just think, oh, I'll just send that W-2. But when you get the IRS transcripts, that other W-2 for that 2 or 3 weeks of employment in 2018 is reflected on the whole tax return. So now we're like, oh, there's $700 missing here. We got to match it up. So that's why I like to have the returns, because I can look at that right away and be proactive instead of reactive.
I'm sure that is much better.
Yeah.
Being proactive, for sure.
Oh, yeah. Yes.
So I work with a lot of home buyers, and a lot of them might not have the best credit, we have the conversation, when is the best time to apply for a mortgage? Let's say they want to buy in the summer or fall of 2021. What's the best timing to do that?
Well, now. If they don't,
I try to tell people.
If they really don't have the best credit now, would be the best time, because, we want to make sure. So first off, why don't you have the best credit? Maybe it's not as bad as you think it is, right? So
right.
Yes. If it's bad, then let's take a look at it and figure out, you can qualify for something, and here's what you could qualify for. And if you like this program and you think you want to move forward, now we can, because those pre-approvals are good for 4 months.
Okay.
If the credit doesn't qualify for a program for some reason, that now gives us time to work on their credit. And credit agencies, many of them offer like a simulator that'll say, okay, if we do these few things, how can this increase this borrower's credit score? So what happens sometimes with people who do have challenging credit is they just don't know what steps they have to take to fix it. So if you apply now, we can look at those steps and say, okay, now we have a plan. And this plan will get us to where you need to be to get pre-approved so you can be a homeowner. But you don't know what you don't know. So you have to have a plan to move forward and get your credit, repaired or improved to make sure that you can qualify for that program.
Okay. So what if somebody wanted to look in a year? Is it too early for that, or pretty much any time?
The thing is, if I'm going to go back to the credit situation, if they do have challenging credit, I never think it's too early to apply.
Okay. And it doesn't hurt anybody. A lot of people think that it hurts your credit to apply for a mortgage because you're going to get a hard pull on your mortgage, on your credit, I mean.
If you do, here's my answer to that. You are allowed to, look at with other lenders and have your credit pulled with other lenders, within typically a 4-week time frame. The thing that might affect your credit is if you're applying for a home loan and you're applying for a car loan, and now you're trying to get all of the department store credit cards because they're offering 25% off on holiday shopping, doing all that stuff at the same time, that's going to affect your score.
Okay, you just raised a really good point during holiday shopping time.
Yes.
If you are looking to apply for a mortgage, let's not apply for any other credit, right?
Let's not do that.
Let's consult a professional first, because there are some people that could benefit actually from getting a credit card if they don't have one. Am I right?
Yes, but that you should do that before you've put an offer on a property and now you're in the middle of
right.
financing.
Oh yeah, I would never, ever, ever, just so you know, I'm looking dead into the client in there. I will never show a house to somebody who hasn't spoken and gotten a pre-approval letter first from a lender, because they fall in love with the house and then their heart gets broken because they're not approved for it. And then they compare every house from there on out to that house. And you just watch that heartbreak over and over and over again. So you guys, do your work first, please.
Yeah, that's right for me too, to be honest, because I know that they want it so bad, and I can't just make up a loan program for them. We have guidelines and rules that we have to follow that you have to fit in, that box. The thing about credit, when you do have it pulled, let's say they found a property and now they're ready to close in 45 days. I know a lot of homeowners get excited about wanting to decorate that property and, get the furniture in there and make it look like their own. But even applying and opening any sort of interest-free financing for furniture or a big screen TV or, any of those other fun items for the house, that can affect your approval. You might get approved for a high limit, for example, at a furniture store of $5,000, and that borrower may not even borrow any furniture or buy any. But if it's interest-free financing, and let's say they are approved for $5,000 and they buy a $2,000 couch, but it's interest-free, no payments are due for 18 months. That's part of that furniture company's financing plan, but that's not what we look at. We say, okay, now you have this $2,000 balance, and we're going to take 1% of that and count that against you in your debt to income ratio. And, that may affect your approval. So I strongly encourage everyone that I'm working with, drink water and eat ramen noodles. And stay on the plan and don't think about buying anything new. Don't open new credit. Try not to spend any money. Just get to the closing date. And then once you're through that and you've signed the paperwork, the next day, go find your furniture. That's fine. But we don't want to affect anything that would upset that credit profile that we currently have in the file.
Awesome. Yeah. Okay. So we're going to switch topics here. So what is the difference between down payment and closing costs? Because people don't realize that they need both.
The down payment is the requirement for the loan program of how much money the borrower has to put down based on what program they're using. So a first-time buyer, conventional, the down payment requirement is 3% of the purchase price. So if you're buying a $200,000 house, that'd be $6,000. There are closing costs, one-time fees that you also have to pay as a buyer that are a part of that transaction. So again, using this scenario, if your down payment is $6,000, your closing costs are probably going to be about that amount too. So the total amount that borrower has to put into the transaction is $12,000.
At closing.
At closing. So yes, sometimes you can get sellers to cover your closing costs, but I would never depend on that. And just really have yourself ready and prepared, which is what I talk about with clients when they're doing the application. So if they don't have that money, again, back to why should you apply now? This is why, so that we can talk about how much money do you have available for your down payment? And then for the closing costs, do you have money saved up for that? If you don't, let's figure out a way to get you on a plan so you can save up, or maybe we can find a gift for you, or maybe there's other resources we could use to help you with those total funds needed at closing.
Okay.
FHA is also a first-time buyer program. They require 3.5% of the purchase price, but same thing with the closing costs.
Okay, wonderful. Okay.
Yeah, people, I feel like they're so focused on the down payment. And I'm like, wait a minute. You still have closing costs, which are all equal sometimes, if not a little more than the down payment, depending upon how much you're putting down. So I average, and maybe you can correct me on it, between 3 and 4% for closing costs of the sale price.
Yeah, that's dead on. Yep.
Okay. So, with everything going on with COVID and our lovely pandemic that we had, I know because I bought a house recently, there were some changes that happened, but what is different now, if anything, due to the pandemic and applying for a mortgage?
Well, one of the biggest changes is to self-employed borrowers.
Which I am, so that's...
Yeah. So with the self-employed borrower, we are required to review bank statements for that business. If any of those assets for that business will be used to purchase the property, we need at minimum 2 months, sometimes 3 months of bank statements to show that there's sufficient assets in that account to help with that purchase, and also enough in reserves to keep the business afloat, that it can actually keep their savings in that account, or money, liquid money in that account, in the event that the business income goes down. So that's one.
That's interesting.
The second one is we are required to provide a year-to-date profit and loss statement and a balance sheet for that business, which the borrower prepares for us. We do look at that fairly closely and make sure that the income from that business is equal to at least the income from the prior year. We don't want to see a decline. The decline is what we're looking for.
What if there is a decline?
Then it's okay. Let's look at the year before that. Let's see how 2018 looked to 2019 and year to date this year. And if we still are like, well, let's figure out how we can work with this, we need an explanation for the decline. It doesn't mean that it's a deal breaker. We just need a reason for it. Obviously, COVID's a reason, but the reason we want to get this information from the borrower is to, verify that they can maintain their income, right, through the pandemic and still qualify for that house payment. Another thing I mentioned earlier was getting a non-expired ID. So it's some people forget, which is understandable. As when your IDs expire, it's not as easily to get them now as it was before the pandemic. You have to set up an appointment and you have to, it's a process, right? Thankfully, it's streamlined a little bit now. You can do that online, and most title companies will accept a printout from the online receipt showing that they've applied for it and they are going to renew this ID. But that's definitely something that has come up more than once in our world. And, it is what it is. We just got to work with it. And I would say the other change is well, at least what I've been noticing is with some loan programs, as a first-time buyer, we talked about that 3% down payment and the closing costs. It's still a good idea to have some money in reserves. So through a 401k, or, maybe it is a gift from a family member, or maybe it's a CD that you've put in the bank 4 years ago, and we would like that money to equal at least 1 month of the house payment. The reason
Okay.
for that, again, is just so we have that peace of mind that you have something available in the event of emergency, job loss, job reduction, just some sort of reserves that are still there. If there is anybody who has been furloughed recently, or any job changes, we also are going to average the year-to-date income. So if somebody's been furloughed, for example, March through June, and maybe they were receiving half of the wages that they received the last 2 years with their employer, and they might be back at full-time wages now, we still may average the income for this year, even with the reduced furloughed income, for qualifying purposes. It's case by case, but I do discuss this with all of my applicants because we want to know if that had happened. Again, not a deal breaker. We just
Okay.
want to be proactive and know that up front instead of have it go to underwriting and then, for lack of a better word, try to scramble and figure out what happened. It's just, again, why you should do the application sooner than later.
So people can still get a mortgage even though they've been furloughed. I'm assuming not if they're currently furloughed, but if they had been and got back to work.
Yeah.
That's not necessarily going to affect their ability to get a mortgage, correct?
Well, yes, it's case by case, but in most of those cases, we are going to, like I said, average that income. So if they're at $20 an hour at 40 hours a week right now, but they were $20 an hour at 20 hours a week for 3 months, we're going to average that out.
Okay.
And make sure that we're using true year-to-date income. Again, case by case, depends who the employer is and how long they've been there, but it's, again, do the application now.
Do the application now.
Yeah.
All right, you guys, I'm going to start cutting you off a little bit. I'm going to share my screen here. So we have Michele. Dun, 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 dun. This is her little card on Alaris Mortgage. You can search for her and her name and contact her directly on there if you guys have any questions. You look exactly
the same as well.
Oh yeah, you can always message us. But look, Michele, you look the same. We're wearing black in the picture and black in this one.
The background's a little different, but
yeah, that's
I know.
And I've had some COVID hair growth.
Yeah, you did.
We really want to thank you for coming on this morning. We really appreciate your knowledge.
Yeah, it was nice to see you. I haven't seen you for so long.
I know we haven't seen each other for a long time. All right, well, everybody, you have a great day. Take care. We will see you on Monday.
Thanks, guys.
All right.
Have a good weekend.